The current price for Lockheed Martin Corp, trading under the ticker LMT on the New York Stock Exchange, is exactly $523.14 USD, reflecting a significant intraday climb of 26.27 USD, or a 5.29% increase so far today, January 8, 2026. This sharp upward movement follows a massive announcement regarding a proposed $1.5 trillion defense budget for 2027, which has sent shockwaves through the entire aerospace and defense sector. While most investors see this as a simple win for the biggest player in the space, there is a much deeper tension at play here that the headlines aren't fully capturing. The expectation among the general public is that more government spending automatically equals higher profits for Lockheed Martin. However, the reality is that the government is simultaneously tightening the leash on how these defense giants can use their capital. Just yesterday, the stock was reeling from news of potential restrictions on dividends and stock buybacks, showing that the administration wants this increased funding to go strictly into manufacturing speed and technical development, rather than directly into shareholder pockets. This creates a fascinating tug-of-war for anyone watching the LMT ticker or managing their individual brokerage accounts. If you are using platforms like Fidelity, Schwab Intelligent Portfolios, or the Robinhood app, you might be seeing a sea of green today, but the long-term sustainability of this rally depends on whether Lockheed can navigate these new regulatory hurdles while meeting the massive production demands being placed on them. What many retail investors don't realize is that Lockheed Martin is currently in a race against its own backlog. The company entered 2026 with a record-breaking backlog of nearly $180 billion, yet its stock price has been sensitive to the fact that having orders isn't the same as fulfilling them profitably. We're seeing a shift where the market is no longer just rewarding the promise of future contracts, it is scrutinizing the delivery. For instance, the F-35 program, which remains the backbone of Lockheed's aeronautics segment, finally hit its stride in 2025 with 191 deliveries, but the costs of maintaining that pace in a high inflation environment are substantial. If you're active in online investing or use investing sites to track your portfolio, you have to look beyond the top-line budget numbers. The real story is the transition from old-school hardware to what the industry is calling 21st century security, a move toward integrated software-defined warfare. This is where Lockheed is trying to outmaneuver competitors who are faster on the digital side. For those of you holding Apple stock, Nvidia stock, or Tesla stock, you're used to rapid innovation cycles. Lockheed is trying to bring that same energy to the defense world, but they're doing it while tied to massive multi-year government oversight that doesn't always allow for the same agility. The recent military activity in Venezuela and the continued tensions in Eastern Europe have provided a geopolitical floor for the stock, but the volatility we've seen in the last 48 hours is a reminder that political sentiment is a double-edged sword. On one hand, you have the promise of a 50% increase in the defense budget, which is a staggering figure that would benefit every part of the Lockheed ecosystem, from their missiles and fire control unit to their space systems. On the other hand, the administration's executive orders targeting executive pay and capping shareholder returns at firms receiving these massive contracts introduce a layer of risk that hasn't been present in previous years. This is why you see such heavy trading volume today on platforms like Interactive Brokers and SoFi Invest. Professional traders are trying to price in the massive revenue potential against the possibility of compressed margins and restricted capital returns. It's a classic case where the smart money is looking for the catch. Comment below how many shares of Lockheed Martin you currently hold, or if you think these new government restrictions on buybacks will eventually hurt the stock's long-term valuation. If we look at the fundamentals, Lockheed Martin's business model is essentially built on being the indispensable partner to the U.S. Department of Defense and its allies. They don't just sell planes, they sell entire defense architectures. Their aeronautics division, which includes the F-35, the F-22, and the F-16, is the primary driver of their revenue, accounting for about 40% of their total sales. But their missiles and fire control segment is perhaps the most exciting area for growth right now, specifically with the massive scale-up of the PAC-3 MSE missile production. They are moving from producing 600 interceptors a year to a goal of 2,000. That is the kind of industrial scaling that requires incredible capital expenditure, which explains why the government is so adamant about the companies reinvesting their earnings. Their Rotary and Mission Systems division, which houses the Sikorsky helicopter business, and their space segment, which produces satellites and works on the Orion spacecraft for NASA, provide a level of diversification that most other defense contractors can't match. When you're doing self-investing or seeking investment help, these are the pillars you look at to understand the moat of a company. Lockheed's moat is effectively the complexity of its products. It's very hard for a startup to come in and build a stealth fighter or a hypersonic missile. However, the reality check for LMT investors often comes during earnings season. The company is scheduled to report its full year 2025 results on January 29, 2026. In past reports, they have struggled with fixed price contracts. These are deals where Lockheed agrees to deliver a product at a set price, and if the costs of labor or materials go up, Lockheed has to eat the difference. This has led to multi-billion-dollar charges in the past and is the primary reason why, despite record demand, the stock hasn't always performed like a high-growth tech company. This is a crucial distinction for anyone comparing LMT to something like NVIDIA stock or other high flyers on the Robinhood app or SoFi trading platform. Lockheed is an industrial giant, not a software company, although they are trying to bridge that gap with their new AI-driven sustainment programs and their Golden Dome defense architecture. The upcoming earnings call will be the true test of whether Lockheed can turn this massive $1.5 trillion budget proposal into actual earnings per share growth. Looking ahead, the catalysts are clear, but the path is noisy. We have the potential for a Supreme Court ruling on the legality of the tariffs that are supposed to fund this defense spending increase. If those tariffs are struck down, the $1.5 trillion budget might never materialize in full, which would lead to a sharp correction in the stock. Conversely, if the budget passes and Lockheed can prove that they are managing their production costs better than in 2024 and 2025, we could see LMT break out to new all-time highs above the 600 USD mark. For those using Fidelity brokerage or Interactive Brokers trading platforms, the key will be watching the backlog conversion rate. It's one thing to have $180 billion in the pipeline. It's another to turn it into cash flow that can be used to pay down debt or, eventually, if the government allows it, return to shareholders. The company's low beta of around 0.6 makes it a defensive play in the literal and financial sense, but the current political environment has turned it into a high-stakes momentum stock in the short term. In terms of market momentum, the broader sector is feeling the lift. We are seeing gains in Northrop Grumman, RTX, and even smaller players like Kratos, but Lockheed is the bellwether. When LMT moves 5% in a day, it signifies a major shift in institutional sentiment. For the retail investor using a Fidelity mobile app or looking for the best investing sites, it's important to remember that Lockheed's performance is often decoupled from the S&P 500's daily movements. It follows the heartbeat of the Pentagon and the geopolitical temperature of the world. While Apple stock or Tesla stock might react to consumer spending or interest rates, Lockheed reacts to the threat of conflict and the budget cycles of Washington. This makes it a great diversifier for an individual brokerage account, but you have to be comfortable with the ethical and political baggage that comes with being a defense contractor. As we wrap up this analysis, the contrast between expectation and reality couldn't be sharper. The expectation is a golden age of defense spending with limitless upside. The reality is a complex, highly regulated environment where every dollar of profit is being scrutinized by a government that wants to control how it's spent. Lockheed Martin is at the center of this storm, and while today's 5.29% jump is an incredible show of strength, the long-term game is about execution and political navigation. The company has the technology and the backlog to dominate the next decade, but they have to prove they can do it profitably under the new rules of the game. For anyone involved in online investing, whether through Fidelity Wealth Management, Robinhood Investments, or a self-managed portfolio on Interactive Brokers, Lockheed remains a foundational piece of the industrial sector that requires a sophisticated understanding of both macro policy and micro-level manufacturing. The central insight here is that the massive budget proposal is a massive responsibility. It isn't just a gift to the defense industry, it's a demand for an industrial mobilization that hasn't been seen in decades. Lockheed's ability to scale their missile production and maintain the F-35's dominance while keeping their margins intact will define their stock price for the next 2 years. We've seen the expectations set by the $1.5 trillion figure. Now we have to wait for the reality of the earnings reports to see if they can actually deliver. If you are looking for stability with a side of geopolitical upside, Lockheed is the place to be, but don't expect a smooth ride. The tension between government funding and government control